You're listening to the Decisive Podcast, insights and analysis to empower confident decision-making.
Hello and welcome to the latest episode of the Decisive Podcast from S&P Global Market Intelligence. I'm Paul Smith, a senior economist at S&P, and today I'm going to be guiding you through some of the latest findings from our Purchasing Managers Indices. And to help me do that, I'm joined today by two fellow economists. So firstly, we have Andrew Harker, our regular contributor to the PMI-based podcast. So good afternoon to you, Andrew.
Hello there, Paul. Great to be back doing another podcast this month. Still a lot going on in the global economy, particularly all around tariff announcements, etc. So I think similar theme to what we spoke about last time on the previous episode, really, looking at the impact of tariffs on economies around the world, but this time with more of a focus on Asia.
Sounds great. Thank you very much, Andrew. And secondly, we're also joined today by Annabelle Fiddis. Good afternoon to you as well, Annabelle.
Hi, Paul and Andrew. Thanks very much for having me on today. Looking forward to diving into our data around Asia, but also taking a look at something a bit different. So our report on job survey, and we compile to look at the latest UK labour market trend.
Fantastic. Thank you very much, Annabelle. Just before we jump into all of that, I think it'd probably be useful to do a little bit of scene setting, especially as it's been nearly 2 months since we last discussed our PMI data on the Decisive podcast. So now, last time, back in March, we flagged the considerable uncertainty that was buffeting the global economy, especially in relation to trade, due to, at the time, the possible escalation of tariffs on goods and services, in particular those imported into the United States. Now, I think it's fair to say the situation related to tariff policies has been and remains fairly fluid. The time of recording, we've had news of a US-UK trade deal and also a notable reduction in tariffs between the US and China. Given the unpredictable nature of how these policies have evolved, I think what we want to do today is just provide an update on what we've seen in our high-frequency PMI data and how the implementation of some tariffs and probably most importantly, the ongoing uncertainty, how that's impacted decision-making, sentiment, and changes ultimately in real macroeconomic variables, all of course measured through the lens of the PMI data. So I think just from a global manufacturing perspective, what we've seen in April is we've seen a dwindling really of global goods trade. Our favourite proxy of this is, of course, for those who've been regularly listening to our podcast, is manufacturing new export orders data, which at the global level, it takes all our survey data we collect from our numerous manufacturing surveys around the world. And in April, that showed our biggest month-on-month reduction in global exports from a manufacturing sense since August 2023. That meant overall order books, so that's including domestic and export trade, they were also down, and that's inevitably impacted on output growth, which I think can be described as marginal at best. Then looking forward a little bit, confidence in the outlook has slumped to a 2.5-year low. I think at the top of the podcast, we kind of said we're going to focus a little bit more on Asia today, but I think just to provide that link back to what we were discussing in March, we were looking primarily how tariffs are impacting North America. And I would stress listeners can go back, of course, and listen to that March episode and see what we were talking about then. But I think just to note, the data have worsened significantly in Canada over the last couple of months. There's lots of uncertainty around tariffs, and they simply just continue to weigh on businesses, both in the sense of sales and market activity and just general business activity as well. So, outside of the pandemic, these contractions are the worst we've seen in all the years we've been collecting survey data. I'll just jump quickly across the board as well into the United States. US growth is its lowest in around 1.5 years. And again, that's really attributed to the knock in confidence and uncertainty caused by these tariffs. Export trade has slumped noticeably, although there is some support to be found for kind of internal, domestic demand. And I think that's pretty common across many of the industrialized nations that we cover with the PMIs. But I think it's probably best for our experts here today, Annabelle and Andrew, maybe to help us delve a little bit deeper and and hear what's going on from an Asian perspective.
Thanks, Paul. And yeah, when we're looking through the lens of the PMI surveys, we did see that manufacturing exports across Asia did increase over the first quarter of this year. So in fact, our surveys did show the best export performance in about 4 years. So 4 years ago was a time when demand for goods was boosted by COVID-19 lockdowns and working from home mandates. And in our surveys, when we're looking at what economies benefited from this front loading over the first quarter, quite notable, we saw strong export performances across Taiwan, South Korea, the Philippines, and also mainland China.
That's interesting because that's pretty consistent. Well, we're doing a little backward looking here, aren't we? That's consistent with the front loading kind of story that we saw maybe in US GDP report for the first quarter, which kind of showed a big rise in imports, which means kind of by national accounting definitions, a widening of the US trade deficit and a big drag on that Q1 GDP number. It just really shows the value of our high kind of frequency data here, showcasing some of those trends ahead of the more backwards looking official data sources. But of course, we're knee deep into the second quarter of the year already. I think it'd be great maybe to get a little bit of an update, Annabelle, on some PMI results for April data.
Yeah, so for April, saw the effects of the shifting US trade policy. So the improvement in manufacturing export sales we've seen across Asia did not carry through into April. So factories across the region instead reported a drop in international demand, and one that was the most pronounced in nearly 2 years. So particular points of interest have been economies that have seen renewed falls in exports in April. So that was mainland China, that's South Korea, Taiwan, Indonesia, as well as Pakistan.
Yeah, it's really interesting to hear about that reversal there, Annabelle. I think it's worth actually giving some information to people on how our survey periods work, just to provide a bit of background so people know actually when the companies were filling in these surveys and where the data comes from. So we conduct our surveys during the middle of each month. Companies generally have about, I'd say on average, about 10 days to fill in the questionnaires. When they're answering those surveys, we ask them to compare the middle of the current month with the middle of the previous month. So, for example, in April, we'd be asking all our questions, for example, has your output gone up, down, or stayed the same relative to mid-March? And actually, if you look at when our surveys opened in April, it was actually on the 9th of the month, which was the day the 90-day pause on tariffs was announced. So companies would have been aware of that pause when they were answering the surveys in April. And just to pick Vietnam as an example and see what difference that actually makes, survey respondents would have been answering the questionnaires on the basis of tariffs of 10% rather than 46%. So quite a big difference there. But even so, in Vietnam, we saw the sharpest decline in manufacturing new export orders since mid-2023. So still showing quite a big impact, really, from those announcements.
So in Taiwan, which plays a crucial role in the supply of goods such as computing equipment and semiconductors, which are the building blocks of most consumer electronics, we saw a fresh decline in export sales that was the quickest in over a year. Again, this renewed drop was often linked to the impact of the shift in US trade policy and resulting uncertainty around future tariffs. Then when we turn to look at South Korea, which is also a very important bellwether of global trade, we saw goods exports decline for the first time in 6 months and at the fastest rate since June 2023. So firms here are also attributing the downturn to the impact of the recent US tariff announcements and that impact on demand. So with these weaker demand trends, we're also seeing this feed through to output. In Taiwan, there was a fresh fall in factory production during April, with the rate of contraction the quickest in over a year. Then in South Korea again, we saw manufacturing output was also down, and it was in fact down for the second month in a row, and at the quickest rate since June 2023. And again, here we're hearing back from panel members that this was due to the impact of US tariffs and lower sales is leading these firms to cut back their production levels.
Yeah, it's interesting looking at the output data because it was a bit more mixed, varied than the picture for new export orders. Perhaps some domestic demand resilience coming through. If you look at the Asia manufacturing output as a whole, was actually still rising in April. And we had still strong growth in India, also an expansion in mainland China. And even in Japan, where output decreased, the rate of contraction was the slowest we've seen in 2025 so far. So some positives still in terms of output, but as you mentioned, Annabelle, particularly sharp falls in economies like South Korea, Taiwan, also Indonesia and Vietnam saw marked declines. So a bit of a mixed picture there in terms of output.
I think it's also really interesting to see in the latest surveys that all of this uncertainty and shifting trade policy is impacting confidence. So in our surveys, we have what's called the Future Output Expectations Index, and it's the only index actually based purely on sentiment. So we're asking companies about how upbeat they are regarding output for the year ahead. So on this measure, we have seen business confidence weaken across the majority of economies we monitor within Asia. So uncertainty is really dominating when businesses talk about their concerns for the year ahead. This uncertainty is causing consumers and companies alike to adopt a much more cautious approach to spending and investment. So when we look across Asia as a whole, we saw optimism was the second lowest since the data collection on business confidence began in April 2012, and if we exclude the pandemic period.
Yeah, I think when it comes to the business confidence and that drop, it's not just actually a phenomenon we saw in Asia. It was more of a global thing. Paul mentioned, I think, at the top of the show how global manufacturing confidence was down to a 2.5-year low in April. And actually, if we look at all the economies we cover for April, I think it's getting close to 50 now across the world. Actually, around 3/4 of those actually saw a drop in sentiment during April. So really quite widespread, not just within Asia, but globally as well.
Turning back to Taiwan and South Korea again in respects to confidence. So in Taiwan, we saw manufacturers expressed renewed pessimism towards the outlook, which is really interesting. So firms are actually anticipating outright cuts to output over the next year. And expectations were the most downbeat overall since the start of 2023. In South Korea, we've also seen business confidence drop back into pessimistic territory. So again, firms anticipating reductions in output. And in fact, if we exclude the pandemic, expectations in South Korea were the weakest since the series began 13 years ago. Again, firms are citing concerns about the potential impact of US tariffs and a general deterioration in global economic activity.
Yeah, and it's actually really quite rare, isn't it, for companies to predict reductions in output. That future output index very rarely goes below the 50 no change mark. So quite stark, really, and quite notable that both Taiwan and South Korea have seen that in April. One more point I wanted to make on the sentiment side of things. I was looking at our Asia sector PMI press release. So this is where we get all the responses for across the whole of the region and sort of split them up into more detailed sectors so that people can see what is driving the overall trends. And so there are 18 in total, 18 detailed sectors at the Asia level, and actually all of those saw business confidence drop from March to April. And it's only the second time that's ever happened. So just again, highlighting that the widespread nature of the reduction in sentiment that we saw in April.
Thank you very much, Annabelle and Andrew, for that really insightful conversation and into the developments across the region in April. And I just think it just shows how uncertainty really does have real impacts on economies, largely just by creating general hesitancy and nervousness amongst businesses and households, maybe when committing to new contracts or investment decisions, spending decisions, etc. So I'd just like to switch topics now just for the last few minutes of the podcast, largely because we're quite lucky today, I think, to have Annabelle with us. Annabelle, on top of these Asian economies that she's covered so well for us today, she also looks after an important survey in the UK, something called the KPMG REC Report on Jobs. And I think it would just be good, Annabelle, if we could spend a few minutes just talking about some of the developments in this survey. It showcases several important aspects of the value that we get from high-frequency data. So maybe you could just kick us off here with a little overview of what the Report on Jobs is and how it works.
Yeah, so for a bit of background, the Report on Jobs is one of our oldest surveys, having started back in October 1997. So the UK Report on Jobs is a monthly survey of over 400 recruitment consultancies across the UK, and they provide incredibly useful information about labour market conditions. So the survey itself is tracking things like staff hiring, candidate availability, vacancies and pay, and this is split by both permanent and temporary job market.
I think, of course, what's super interesting at the moment in the UK is that on the one hand, we've got an economy that's been buffeted, like we've kind of discussed here today, by tariffs and uncertainty, etc. But there's also been changes in government tax policy stemming back really to last October's government budget. And that's principally related to the cost to firms of employing workers. I wonder whether your survey, Annabelle, can help us tease out some of the impacts that maybe we've seen of that change in tax policy has had on the labour market in the UK.
Yeah, there have been recent changes to payroll costs. So these are costs paid by employers to hire staff. The amount of national insurance paid by employers, so these are payments for social security, they went up in April, while the national minimum wage rates have also increased during April. So as a result of this, recruiters are telling us that businesses reacted to this by freezing or cancelling hiring decisions. In the survey, this showed up through steep reductions in overall vacancies, the number of people that have been placed into permanent roles, and the lower usage of temporary workers. So job losses have also been reported by recruiters as firms have been looking at ways to cut back on costs.
That tallies very well with our UK PMI surveys as well in terms of reduced job numbers. I think the PMI data have shown something like 7 successive monthly reductions in employment numbers, which is the worst run since the financial crisis, again, excluding the pandemic period. I guess what that leads to, right, is an increase in the number of job seekers and I guess what, in a very economisty term, the supply of labour, if you like.
Yeah, that's exactly what we're seeing, Paul. So redundancies and the drop in hiring activity have driven sharp increases in candidate availability in recent months. And in fact, if we exclude the pandemic and the global financial crisis, which are two big economic shocks, the current period of rising candidate numbers is the most pronounced since the survey began back in 1997. So when we look at this combination of reduced demand for workers, but at the same time sharply rising supply, this has meant that pay pressures have cooled notably over the past year. So the survey is showing that increases in pay for both permanent and temporary staff are rising at rates that are comfortably below their long-run averages. And this suggests that pay growth has softened and something that it's likely to be picked up in the official data in the months ahead.
In the timing for that's quite useful. So I think we had today when we're recording this podcast some official labour market data, which I think showed a slowdown in average wage or earnings growth. That's a really important development, right? This slower wage growth story, because how it might impact monetary policy, right? I think last week the Bank of England cut interest rates. Do you think this data or these developments had any bearing potentially on that kind of decision?
Yeah, we know the bank's Monetary Policy Committee do use this survey to build a picture of how labour market conditions are faring. So it's therefore one of the number of data sets alongside the PMI that help shape their views on the right path for interest rates. So in this case, the report on jobs and the PMI data have both been signalling weaker economic and hiring conditions. So this has supported a move to cut interest rates this month.
Yeah, I think once again, hopefully it's just helping to highlight the value of this type of timely, high-frequency data to policymakers, be it the report on jobs in this instance or more broadly in a global sense, that the PMI data, during periods that we're currently experiencing lots of uncertainty, it is really useful to have this type of data just to help understand economic development quicker than most of the official data that is provided to us as economists and, of course, those in charge of making these kind of policy decisions. Just thinking about global trade, the coming few weeks are going to be extremely significant, I think, as we come into what our colleagues in supply chain research have noted is a peak season now for manufacturing decisions. Container shipping rates, seaborne, inbound shipments data to the US, and of course the PMIs. These are all information sources that we have available for us at S&P Global Market Intelligence, and I'd really stress to listeners to keep a close eye on these sources of information as they become available in the coming days and weeks. So I think with all that in mind, I think all that's left for me today is to say thanks to both Annabelle and Andrew for their insightful contributions as always, and we look forward to discussing more PMI data insights on the Decisive podcast later in the year.
Thank you for listening to the Decisive podcast from S&P Global. Please subscribe and join us for next week's episode. Until then, stay curious and stay informed.